Scott Martin is with us. John Lonsky is staying with us. Susan Lee, Ashley Webster, of course. Markets moving ever so slightly higher after impeachment broke 2 days ago. Scott Martin, open question. Do investors really care about impeachment?
Not at this point, Stuart, but I think as we get further down the road, as Pelosi and company refuse to give up, apparently, and block other legislative agendas, I think the market's going to start to care. And certainly I will give investors a word of caution and a word of hope in the same sentence. If we do get a sell-off after, let's say, a House vote, I would use that as one of the best opportunities of the year or early next year to buy in, because we know the Senate's not going to confirm it.
Yeah, John Lonsky, okay. Now, John, you're an economist, okay? I mean, you're not a market watcher, you're an economist. But you told us earlier on this show that if we don't get USMCA because of the impeachment drive, that's bad for the economy. Spell it out.
That is bad, because that means that companies will probably engage in less investment spending, hire few people because of uncertainty regarding our trade relations with Canada and Mexico. I might add, though, that if impeachment backfires on the Democrats, in a way, that might be good for the economy. That might lessen the likelihood of the Democrats taking the 2020 presidential election. And I can't help but think that if we go into a lot of detail about this impeachment process, the reasoning for it, it could only hurt Joe Biden. It's not going to help him with the average American voter. They're going to see a family member benefiting from his office.
Let's remember, about 20 years ago, the impeachment of President Clinton backfired on Republicans, and the market went up. It went up big time.
It dropped first, though, Stuart. It dropped first and then went back up.
Yes.
Yeah, but there were other things going on in '98. You had Russia, long-term capital management. So,
but at the end of the day, there was no impeachment. Well, he was impeached, but he wasn't kicked out of office.
Right.
And if the same thing happens again, can we expect a market rally?
Depends on how long it drags out, those two.
All right, that's the big picture this morning. Let's get precise. Peloton, for example, they go public as of this morning. Other IPOs of late have not been very successful. Here's how some have done since their IPO date. Start with Uber. They're still below their IPO price. Can we show that on the screen, please? Love to see it. Thank you. We got $31 a share on Uber.
It went at 45.
It went out at 45. How about Lyft? I think they're way underwater. They went out at
72.
What was it? 72. And we've got them Lyft at 41. No. $41 a share. How about that?
Wow.
Pinterest, I believe they are up since their debut. I'm trying to squint at this one. We're up about 12% since the debut. Okay, so Pinterest was a winner. Red arrows for business software maker Slack, down 15 bucks since 41% since the IPO. Green arrows for Zoom video, that went up to 28%. Got that. All right, Scott. Are we overvaluing some of these IPOs?
I think clearly we are, and the ones that are overvalued are painful. And I think that's the weird one about Peloton. You know, I would throw Beyond Meat in there too, Stuart, which obviously went beyond expectations and rocketed up a few 100%. But Peloton's a weird one because they call themselves a fitness company, but also a technology company, a media company. It feels a little, if I dare say, WeWorky to me. And so it makes me concerned about valuations here and what the company is really all about. And that's why it's going to be trading too high today, I think.
Careful, Scott. Comparing Peloton to WeWork is a dangerous game. What do you got, Susan?
Because at least Peloton got to market here. But look, so valuations, they say even at $29, which is the high end of the price range, you're only at 8 times trailing sales. Compare that to, so let's say Zoom Communications. They went out closer to 30 times sales, right? And you have recurring revenue. We talked about this. People that are paying $39 a month. You're accessing 45 million Americans. Yeah, that's right, with these expensive machines. So some would say, look, it's underpriced. You still have 110% growth. At least you're paying for something.
By the way, the Dow just turned negative and then it just turned positive. Ever such a fraction here. This is a wait-and-see market at this stage. We don't have serious losses anywhere. NASDAQ down a third of 1%. John, you wanted to get
Well, you know what I'm thinking of right here? I'm thinking of the year 2000. After March 2000, the bursting of the dot-com bubble. I think we have something like that in the future, maybe not right away, but once liquidity begins to dry up, a lot of these companies will be exposed as being totally incapable incapable of producing adequate returns at any point in the future. Everything collapses. And unfortunately, with that, of course, a lot of jobs are going to be lost.
Careful about the use of the word collapse. You know, I think
Pence.com.
That's a big word.
I started it. Sorry, John.
Yeah, it's your fault, Scott.
Okay.
This is a story that just fascinates me. I'm talking McDonald's here, because they have done an about-face. They are now jumping on the vegan bandwagon. They're going to test a Beyond Meat burger in Canada. McDonald's is the biggest player of them all in the burger business, and now they're getting into this meatless meat kind of deal.
Right.
It surprises me.
Well, okay, given that Easterbrook was so negative about it when he was asked about the plant-based burgers, he says, I don't think it'll drive traffic. I'm not sure this trend is sustainable. But look, they're going to test for 12 weeks at 28 restaurants across Canada in Ontario. It's being called the PLT, so the protein, lettuce, tomato. Less than $5. But also, don't forget what happened with Burger King when they had the Impossible Burger. That drove traffic 7 times. So, you know, it's a trend. People want to actually wait in line to get it. Yeah. So might as well drive some traffic. So,
Scott, what do you make of McDonald's as a stock? Forget the vegan bit. Just what about McDonald's? It's done extraordinarily well.
It's done great, Stuart. And I'll tell you, a great test for McDonald's is one, unfortunately, I guess, for my waistline that we have right down in the lobby of my building where I work. And I'll tell you, just about around the clock, that place is full. Either people are using the kiosks or the lovely people at the counter. I'd own McDonald's here.
Yeah, look, McDonald's is still fast food. You have to wait around all day to get what you want. And everybody knows the menu before you even walk in the door. I mean, come on, isn't that what you want?
That is what you want. And that's why the stock hit a record. You know, if you invested $1,000 into McDonald's back in 2009, do you know how much it'll be worth today?
Tell me.
$5,000.
A 5-fold increase in your money in 10 years.
In 10 years.
And I did not see that coming. Even though I am a firm McDonald's customer.
And it's a dividend play. They were giving back 3% as well. Good dividend yields with buybacks. So, you know, the stock has done very well.
Check that big board, please, because it looks to me like it's a kind of a wait-and-see market. We're down 2 points on the Dow Industrials. There you have it. The Justice Department is probing Facebook over antitrust concerns, and the stock is down 1.5%. Now, we've covered this extensively. We often say that Facebook's Teflon because nothing really happens with these probes, but today, down 1.5%. What have we got there? We got Facebook at 180. Show me Rite Aid. Better profit. Oh, how about that? That's good enough for a 16% gain. All right. Carnival Cruise Lines, the stock is down. It lowered its forecast. Whenever you do that, you lower your forecast, you'll get taken to the cleaners. They're down 8%, Carnival Cruise Lines. Profit at ConAgra went up, and the stock is up nearly 2%. KB Homes, the revenue fell short of these expectations, and they're down 1 cent. Check out the price of gold, $1,500 an ounce, $1,518 to be precise, up $5 today. Oil, I can never tell where this thing's going to be. It's at $56. Oh no, it's at $55 per barrel. Left-hand side of your screen, the Dow just turned positive. The share price of Pier 1 down today.
Oh dear.
It lost more money than expected. The company seems to me that the retail is being divided these days. There are clear winners and there are clear losers. Looks like Pier 1 is a loser. Walmart's a winner, John.
I think you're exactly right. Walmart is adapting to the times. They're doing a great job with e-commerce, and they're going to remain strong indefinitely, I would think.
There was not one good thing in this Pier 1 report, by the way. Not one. I can't find one. Comp sales down 12%. Operating loss up 49% from a year ago. The loss per share was so much greater, 93% more year over year. This was a dismal report.
Well, what do you think? Is it because of the content in the stores, the merchandise they're offering?
Lots.
Has it got something to do with tariffs?
Well, a lot of cheaper options online that can get it to you right away.
They don't have an e-commerce strategy, and don't forget, you need specialization when you sell furniture these days, like Casper and the like.
Okay, Casper. I do know that.
Yes, that's right.
I got it. Hey, look at this. 9:40 Eastern Time. Sorry, Scott, time's up. John, same story, but gentlemen, we thank you very much for being with us. Very big day, although the market's not doing much for it.